Okay, welcome back. The market's down 76 points, and what a turn we've seen from as compared to what things were looking like in the morning. I mean, the Nifty was up over 100 points, and we're down 77 points now. I mean, you can blame it on the U.S. China-India border tensions, or I mean, they could be a mix of that. And of course, the fact that the run-up has been spectacular. Vinay Khattar is head of research at Edelweiss, and he's joining us, Edelweiss Wealth, and he's joining us to take some questions. Vinay, thanks very much. Great to have you with us here. You kind of join us on a day when the market is showing that, showing us what can happen. It's not always one way. There can be shakeouts which happen from time to time. I mean, this is just 70-80 points right now, but what are your thoughts just purely in terms of what the market has done, the valuations we are trading at, and return potentials from here on?
Morning to you, views. So let's look at what happened in the market in the last few months. If you take a broader index like CNBC 500, 85% of the stocks we have given a return of 50% or more in last 3 or 4 months. 1 in 3 stocks has doubled. So that's a very, very significant up move. And that said, you moved from a valuation which was very low, our market cap to GDP ratio had become less than 50%, to now you're more aligned to the averages at about 75-80%. Now, with this kind of a stock rally, the margin of safety which existed has gone away. Now we are more in line with our earnings multiples on Nifty at about 18-19 times, which is slightly ahead of our long-term averages. So, given the strength of the rally, there was bound to be some kind of a correction and stoppage. This could not have continued forever, one. Second, the initial trade of economy opening up and things being not as bad as what they seemed, and RBI moratorium coming into place as far as the banking NPAs were concerned, which would have had a positive effect. Almost $10 billion of capital being raised by the banks. All those good news are in the price now. Now, if you look forward, I think there are a few things which are of concern, which would probably put some degree of pressure on the market. And that's it. Let's look at the global scenario versus ours. Our service PMI is still at about 34, 35 levels. Our manufacturing PMI is at about 45 levels. We are one of the few economies on the global platform which is still contracting. Equivalent numbers for US and China are all upward of 50, which means their economies are beginning to expand. So you would get corrections, and to our mind, this is a buy on dip market, especially given with what's happened on the stock valuation. Most of the stocks which are trading fairly cheap are quite expensive, so to speak. So a buy on dip market and corrections should be bought into. That, to our mind, would be a good strategy to be in this market.
Let's, Vinay, talk about what to buy on dips, right? I mean, that's the next logical question. You've got 3 ideas that you can talk about, and why don't we do that? I mean, let's start with one name that you are highlighting, KNR Construction. Why do you like it, and is this a good price to buy it?
So one, construction space has not rallied as much as what some of the other sectors in the market have. So that provides some degree of comfort. Second, with government's focus on infra building, NHI has seen a very, very strong order offtake that we have seen. 1,100 crores, 1,100 kilometers of roads have been ordered in just last 3 months. Expectation is another 2,000 kilometers of road coming in next 3 to 4 months. That could add very significantly to the order books of almost all players. KNR is, of course, one of the best names in the construction space. Very, very light balance sheet. That is the core problem of the players in this space, where the balance sheets are heavy. There's a huge amount of debt. KNR does not have any of those. At 7,500 crore order book, you have a book-to-bill ratio with a visibility of almost 4 years. And once you see the sector turning, the best guy in the sector tends to rally the most. And they have sold off most of their assets, so the balance sheet is very light. They're likely to get a further infusion of about 350 crore rupees on sale of some more assets, which is happening, which is in the pipeline. So overall, if you look at the macro piece from the order book point of view and from the valuation point of view, KNR appears to be a very, very good bet as far as the construction space is concerned.
Vinay, morning. This is Reema here. Healthcare per se as a sector has made a comeback in the last few months. From an array of stocks that you can choose from, you are picking Metropolis. Why is that? What is the story that's going to unfold there in the future?
So diagnostic is a space which we believe has a very strong structural growth trend, and that's likely to be a multi-year trend. It's something what we saw happen in the chemical space. Now, in India, other than 3 or 4 large players, which are national players, and some regional players, most of the industry is unorganized. And there are lakhs and lakhs of mom and pop diagnostic centers across the hinterland of the country. And as we progress down, as more quality requirements of diagnostic centers come up, the larger national players would definitely have an edge. One. Second, Metropolis, as compared to its peer set, if you look at the history of last 4 or 5 years, has done significantly better. They were compounding their earnings at close to 15-16%. The rest of the competition was barely double digit at about 10 to 11%. And it has become a premium position player in the market. So their pricing on the products and their profit margins are significantly superior to what the competition does. Part of the reason is that its outreach in hospitals is very, very good, where the complex tests are given to the patient. And these complex tests obviously have higher pricing, which leads to better margin. And the last one here is the huge outreach that the company has done in terms of setting up retail centers. So their B2C business is likely to go up. Their retail centers where the patients can come in for the test has shot up by almost 6 times in last 4 years. With that kind of a footprint which has got established, it's just a matter of time before the assets start getting juiced and the footfall of patients in their diagnostic center begins to go up. A combined effect of this is that over next 4 to 5 years, we see the structural story continue to gain traction as the healthcare needs of the country go up.
Vinay, we'll leave it at that. Thanks so much for joining in. So that's the view coming in from the head of research at Edelweiss. Well, he's going with KNR Construction and Metropolis as 2 of the picks, which are looking good at this point of time. We've been looking at the markets and the way it's sold off. Prashant, one other factor which could add to the weakness